I am with a very special guest and a good friend of mine, Joel White. He is the founder and Group MD of Ramsay White. Ramsay White incorporates several different businesses. So Joel, tell us, what does Ramsay White do?
Thank you for having us, Dorian. Ramsay White was set up initially to help property investors and developers fund their deals. So as an intermediary, bridging, buy-to-let, commercial development, residential investment lending. And off the back of that, we set up Ramsay White estate agents, so traditional estate agents, sales, lettings, and then we've got Ramsay White wealth management, so pensions, investments, inheritance tax planning, and then we've got Ramsay White accountants, which is the structure, so holding companies, limited companies, LLPs, that tax position for our clients. So we work with clients all across the UK, for nationals and expats to invest in the UK property market, and that's what we do.
It's quite a broad set of suite of businesses there, but they're all connected. And I remember, obviously we've known each other for several years now.
Yeah.
And I always have great conversations with you. Just before we recorded this, we did a podcast worth of recording of content outside of it. Yeah. All the good stuff as well. So hopefully we can bring that back here for the viewers. So what about your personal background then? What did you do to get the position of founding Ramsay White? What was you doing pre that?
Left school, joined the army. I was coaching guards for a few years. Did that. Went off to university afterwards, and then I wanted to be in property. So I got a job as an estate agent in London when I was about 24. Did that for a few years. West London, selling properties, lettings, generating valuations, and I just... Was it hustle and bustle? It was like you would imagine? Yeah, I just come out of uni, and I was keen to make a dent in the industry. I think what made a difference for me is I wanted to be there. A lot of people got into estate agency because they needed a job, because I actually had an end goal. I wanted to be in property, wanted to be in business, and I've seen as estate agency was a route to market for me. So I got in there, and it was fast paced. West London, 10 properties on, 10 properties sold, a lot of competition. My seat that I was in, they told you this costs X amount of thousands a month that you have to generate, or there's just 10 other people to be in your seat. So you have to generate. So there's a target.
Cutthroat there. Very
cutthroat. And, it was ruthless. And but I loved it. I enjoyed it. And, I found it easy because if you say to a client, what do you want? And they say X, Y, and Z, all you need to do is deliver. Yeah. So you want to find this type of property, go and find that type of property. You want to sell it for this much, go and find a buyer. So, easier said than done, but I felt for me it was just about building strong relationships with vendors, buyers, landlords, tenants, and just connecting the dots, and just hard work allowed me to progress in that space. But I wanted to be in property, and when I did my first deal, and I realised I didn't understand about the funding of the deals. Okay. So my personality type, I like to have an understanding of everything before making that calculated decision. So I was working for a corporate estate agent at the time, so I've been independent and corporate, which was great to see the different dynamics of how they operate. But what the corporate was training mortgage advisors, so I asked to be trained up. I was a branch manager at the time. They thought that was alien. Why would you want to be a mortgage advisor when you're running a branch and you're getting paid on what the branch does? But longer term thinking, for me, it made sense. I understood about buying property, finding deals, negotiating.
So they just wanted to keep you on that desk, churning sales. Yeah. But you knew where you wanted to get to, and revolved unlocking that knowledge piece on finance. Yeah. So how did you do that?
So I did my CMAP.
So you did that yourself then, did you?
No, through the company.
Oh, so they did do it then?
Yeah, they did it. Okay. They allowed me, so, perseverance, and said, like, this is why I want to do it.
So you didn't stop at the first no then?
No, I just, I understood what they were saying and politely said, this is where I want to be. And I think I can make a difference within your business if you allow me to do this. So I did that, but that was residential mortgages. So first-time buyers, home movers, which was great. I got a good grounding of how the residential mortgage market worked. And then I started working with the odd landlord. But we were restricted on lenders, and at the time, is that because that company itself had its own panel they wanted to use, like preferred lenders back then? They were a large corporate, and they had 21 lenders on their panel.
Right,
it was residential.
That was their
panel.
Based. Right.
and I had like 1 or 2 buy-to-let landlords. And at the time, the tax changes were being implemented, so you can offset your mortgages. And a lot of landlords were going to move to limited company. And I said to my manager, look, I think we should look at limited company lending because there's a real opportunity here. And they said, that's not for us, it's very complicated.
I remember that time. Everyone thought it was really complicated, didn't they?
Yeah, really complicated. Limited company's tough, you don't want to be doing it. So I knew that would be an opportunity to lean into. So I moved into a commercial brokerage who specialised in doing that.
To get that experience then as
that experience. I wanted to work around landlords, entrepreneurs, business owners who operated in that space.
So these were still very much employed positions then. So you had this like drive internally that you knew that you wanted to get into property, you wanted to understand all these businesses. But it is quite rare that an entrepreneur, because you are definitely an entrepreneur, can hold themselves so long in a job, in full-time employment. Because other entrepreneurs, like probably you now as well, lets that fire just unleash and they just say, fuck it, I'm gone.
But fire unleashed in the wrong direction
it's terrible.
Causes carnage, right? And in entrepreneurship or business, that could be financial loss. So I'm naturally quite risk averse. So I'll take risks, but I like to make sure that I hedge my bets and get a win on the out of the other side of it. So
good job, you're a financial advisor now.
If you look back, so my kind of background, where the entrepreneurship started for me, or the desire to be successful, is I grew up in really humble beginnings, kind of council state, in and out of foster care a little bit. And at the time, when I moved back into the household, my mum's partner, his brother was an entrepreneur.
Okay.
And he had a very successful business, and he sold that, and then he started another company which went on to do really well.
So you witnessed that quite young, and it kind of
well, I only ever met him once, and he come on our estate, and he had this Rolls Royce.
Oh wow!
And imagine a council estate.
Yeah, imagine.
People. It was like kids with kids, and drug abuse, and alcohol abuse, and a lot of crime, and a lot of parents didn't even have cars. So this guy's come up on the estate, and he's in a Rolls Royce, and it's green, it's got leather seats, and me and my brother got
different
to sit
world.
in it. Well, the seats were nicer than our own sofa, right? And I remember driving around, he was driving us around town, and I remember thinking, I hope someone from school sees me. Because it was like just such a nice experience. But I went home and I said to my mum, how's he got this? Because I didn't even know, my mind couldn't even comprehend what it looked like, a spaceship to me and my brother, right? So
and you think, don't you, growing up in that environment, that which is one of the big problems about growing up in the difficult environment, is that you think it's unreachable. It's never for you. It's a different class, different type of human being type of thing.
Yeah, like no one's telling you that something like this is possible. So it was a paradigm shift for me. And I said to my mum, how's he got that? And she said, well, he's a business owner, entrepreneur. He's in business. And I said, well, why are we not in business? Because if it's that simple, right? Because she said, my job is your mum, I'm looking after you boys, right? There's 3 of us. So for me, that early on, it was like, okay, there is another way to do things. And it was just that curiosity. How do I be in business? How do I better myself? How do I progress? And I think that was a journey that started from about 11. And I didn't know how to go from A to B, but I would just know I wanted to. But it just led me on.
It's amazing, isn't it? That power of that seed of possibility. That someone like says that relatively connected, i.e. from a family. So it's not a royal person that seems so out of reach. It's someone in a close vicinity has achieved something, and it is possible.
Yeah, that's it. And I think that for me was just a pivotal moment in my life, because it was like, okay, there's another direction you can go in. And just because I grew up in this environment doesn't mean that dictates who I have to be. And I think success for me is having the ability to start in one place, but developing the mindset to move past that and become, who you want to become, really. And I think a lot of people I grew up with, they are products of their environment, and they decided to stay there and then followed in their parents' footsteps or their neighbours. 100%. So for me, it was just, it was an eye-opener, and I just jumped on it and thought, how far can I take it?
And do you think that the power of that seed, in a way, of that experience, were obviously that was a catalyst, and it really got things moving? But to really break out of your environment, because you have friends and a circle of influence, and they say you are the sum of your 5 closest. So how did you actually break away from that environment, so to speak, then? Was it through self-development or changing your network? Like, or was that what the army was for?
Yeah, join the army because, you can't behave like what was going on in the estate in the army. You had to be legit and disciplined and healthy, and effectively an effective soldier, which they put you through 6 months of training. So I wanted that kind of
discipline,
environment where I could thrive. So I was looking to progress. I didn't know how that looked. So I didn't know if it's the army or financial services. I didn't know where to put that energy. But that seemed like a good fit. And I was boxing. I was an amateur boxer, and the recruitment person from the army seen me, and he said, "Why don't you come and join the army, and we can look after you in that space?" So I went down that route. But while I was there, I started looking at personal development. I started reading then, and how it's not just about, the army taught me the body can do more than the mind thinks, right? And I learned that early on. So you'd be running up and down the Brecon Beacons, and your mind's going, "I can't do this. This is horrible. Go home. You don't have to do this. It's not mandatory." But your body, the 1 foot legs in front of you, just keep going. And once you break through that barrier, your mind can start getting.
Tell you what, you need that as an entrepreneur, because there's so, like, everything tells you not to do it once you're in, and all the problems start coming. And then there's this other. I say to some people that if you witness me, you'd think sometimes I'm schizophrenic, because it's like it bounces between all these things that are going terribly wrong, all the things that could go wrong, and there's easier ways to have a nice life, and then this other part that's like,
the drive.
What are you doing? You're only here once. Just absolutely, look at the impact you could make. Look at all this opportunity.
It's that tenacity. And I think you learn tenacity through hard experiences.
Can't buy that.
And I think but it's how you act within them situations. So you can react emotionally, and that has a negative impact on the outcome, or you can kind of learn to control them emotions and think, right, how can I move this forward and use it to my advantage? I think if you can capture that and not get impacted by the circumstances too much, and focus on the end goal, you can move through your objectives. Like, in the army, they're sending you to war, and like, that's not a normal situation. No one's teaching that. So they go, right, you're going to go over here, and this is how you're going to do it. That's a certain type of mindset. So if you look at business and what you're trying to achieve, well, you're trying to take up market space, market share, which is like a battleground sometimes, or feels like it.
Well, that's why they say one of the best business books is actually The Art of War. I've got a leather-bound copy in my office. But talk about self-development. You brought me a gift.
I thought it'd be. You love your reading, right?
I do. Competitive Advantage, Michael Porter. As soon as you give it to us straight away, one of the part of the business plan I did for this business was obviously, which is Porter's 5 Forces, is understanding how to get a competitive advantage and what that landscape looks like. And it very is kind of like metaphorically planning for a war, a battle, series of battles, and an overarching war. Because you're working about all these other players effectively, and what their strengths are against, how can we leverage that or cultivate a hopefully sustainable competitive advantage and win the game.
Exactly. And I think he talks about there like price advantage, or just differentiating yourself, and it's how we do that. And I think ultimately in business you need to decide, why are you doing it? So like, what do you want to achieve, and why do you want to do that, and make sure it's linked to your personal goals as well as the business goals, because we see a lot of people drive their businesses forward, but sometimes it can be driven on ego, and you grow this huge business, but it doesn't really serve what you want individually. So it's really important to tap into kind of what you want, and does that link to where the business is heading? And then when you know that, you can then start applying these theories and strategies to make a difference. I think, I'm not sure the numbers, but how many businesses are set up on Companies House each year? But then how many, because it's like, what, 20 quid, 50 quid to set one up?
13 back then, if I remember. It might have gone up now.
£13 or something. So, and then how many of the businesses are still relevant or active a year later, 2 years later? And I think for me it was always like, how do I beat them odds?
Definitely. Well, even again, they say statistically most businesses will fail within the first 3 years, and definitely within the first 5 years. So if you can, those in my head as well, I'm always thinking about those odds too, because it is like gamifying. I'm going to beat that, but also though, most businesses stay in the micro category. There's SME and large companies, but most businesses are micro, so like sub 10 employees, sub million turnover. And I do very much think of it like a game, but you are right, it does come back down to, it really helps when you know, or you have got an idea. And you mentioned it very early on in this chat that you knew that you wanted to be in property. You wanted to, and the more you got exposure, you knew you wanted to be in business surrounding property, because obviously it must have been an interest. But just while we talk about that, if you were speaking to somebody that didn't know what they wanted to do, but they knew they were, or they felt they were entrepreneurial, how can somebody, what would be your advice to somebody to figure out what they want? I know only they can figure that out, but what would you say?
I think experiences can really help. If you're not 100% sure on what you want to achieve, then you still need to do something in the meantime, right? So the different experiences you have, whether it's with people, traveling, work, different companies, can start shaping your views and what you want to do, right? So like for me, I worked in corporates and I worked in independents. The corporate showed me how to structure meetings and P&L and recruitment and driving a business forward in a sustainable manner. And the independents taught me how to be nimble and make decisions quickly, and if something messes up, own it and just move forward, and have a bit more flexibility in your approach. So I think between them two, it taught me how to run and not run a business. So add your own style in it. So that experience has really helped me. And then the corporates is like you could be in at 5 a.m, 6 a.m, you're leaving at 10, 11 at night. Independence is a bit more flexible. So what do I want in that situation from a work-life balance? But I think if it's a personal thing, I think it's really important to write down your thoughts. I think that really helps. Like, I said to the team the other day, where were you 5 years ago and where are you now? And just let them think on that, and then they wrote it down. One of the guys was like, I was 13 5 years ago, whatever. So it's like, I was in school, but I think
back that was GCSE years back then,
but if you think, where were you 5 years ago and what's happened in the last 5 years, or where do you want to be in the next 5 years? Okay, because I think people underestimate what they can do in 5 or 10 years and overestimate what they can do in 12 months. And when they look at a 12-month period and they think, they put so much pressure on like what I want to achieve, and I got to be in this shape, and I have to have this much money, and I need this business success, and I need my relationship to look like this. There's a lot to do in 12 months.
I still do that now, to be honest with you. I still put myself, I don't know if you're the same. I understand.
But you still probably have a 10-year plan as well.
I do,
Yeah, so, but it's just not that blind optimism in a 12-month period, but actually having a plan where I can achieve it in 5-10 years, and then going into that with good runway. And
so obviously you went through effectively both Goliath and David's in terms of large corporates and small, upstarts and bigger than upstarts, but you know what I mean, independents. So you've got experience combined from there. And then how did you make that leap then from being employed to starting Ramsay White?
It was always on my mind to start Ramsay White, start my own company, and it was just timing. I was just waiting for the right time. And I'm 36 now. I started Ramsay White when I just turned 30, so I was always thought, well, by the time I'm 30, I'm going to start the business, and I felt like I had enough experience, and the timing was right for me. So I set up in my spare bedroom, and the objective was to help property investors and developers fund their deals. I wanted to be the best known and deliver the best within that space. I could do residential mortgages or second charge, all this type of funding, but I niched the business, which I think gave me the competitive advantage because I specialised in that space initially.
100%. They say that niched businesses can gather momentum much faster than even Amazon started very niched.
Selling books.
Exactly.
I think it was just, as a developer or investor, what problems are you facing when it comes to funding? Okay, maybe lack of information, the right type of funding, the cost.
100% funding, please.
100% funding.
Probably that come up all the time.
Just go back to 2004.
Pre-crash.
So it was putting that, and then going to find the lenders who had an appetite for that space, and then putting them two together. Where what I found is a lot of the investors and developers were professional and wanted to build a business in the property sector, and the lenders wanted to work with people like that. So just combining the two, and then started to see traction off the back of that, and then we grow. But for me, I look at three things when it's in business, and it's how do we offer a service to the clients that's ultimately holistic, that can give them what they want. Initially, it was focused on the investment and development, but then as their portfolios grew, our business grew as well. So how do we offer them holistic service where we can make their business better, more robust? 2, how do we offer more opportunities within the business? Well, if we just stay in this sector, then we can only employ people in that space. So we need to look at other avenues and verticals within the business is that we can bring people in and let them move around so they can start in mortgages, then wealth management or accountancy or property. And then the third thing was making the business robust, different profit centres. So we could beat them odds of, not just lasting 12 months or 24 months. And I think them 3 things have served as well.
But there's also that common trap that entrepreneurs do is once they finally land the business that starts generating traction, they also make the same mistake of moving on to that next profit center or next connected branch. Because entrepreneurs are they're the first ones to sell an idea to themselves of why it makes sense to do this other business as well. And how, you could have a financial services firm and a mining opportunity, yet an entrepreneur will somehow link them back as being connected somehow. Because that's just what we do. We see opportunity in everything. But that's at what stage, from your point of view and for advice, is it safe to, how do you know when it's a good idea to move on to that next profit center?
Yeah, I think it's a really good question. I think that as entrepreneurs or business people, we should be aware of our, strengths, but also our blind spots. And I'd say a blind spot for an entrepreneur is that shiny penny syndrome. It's exciting starting a business. We're great at it. We love the ideas. Everyone come in my room for a strategy meeting.
War room.
And like you said, you just convince yourself that is the right thing. But that's why you need a really good team around you to rain check if that is the right thing for your business, because ultimately the business needs to come first, not your ego. You need to kind of take your ego out of it. Like there's 2 things that we try and remove in Ramsay and White, and it's greed and jealousy. We see a lot of businesses fail off the back of having too much greed and too much jealousy. So remove them and focus on how do we make this business ultimately the best it can be, and each week, month, quarter, year, reviewing that. So where is the demands coming from and how are we serving them? And I think when your demand is oversubscribed and you're meeting that, then there's different opportunities alongside that. So how does it link? So for us, mortgages, we've done over 700 million in lending in the last 5 years, right? So there's a lot of transactions.
It's been a high growth rate. I mean, obviously you were always there in the fast growth 50, growing at a tremendous speed. So congratulations on that.
Yeah, thank you. We can come to it, but so just the 700 million there in lending. So, but of all them transactions, clients were then saying, do you have a tax advisor, accountant I can speak to? And we would recommend different people, but we get asked enough of it, and then actually we felt like we could bring that in-house and deliver excellence within that space. And the same thing for wealth management. So that happened. It's a natural progression. So for us, is it a brand new business or is it a natural progression for your business? Because obviously having a financial service business and a mining business is very different, unless we're suddenly funding mines around the world. But so I think it's a progression, but you still have to make sure that you're delivering excellence within the business. And because what can happen is when you start opening new arms, you can be stretched thin, and I think that's where it's very dangerous to be.
100%, yeah, and you are right. Having a strong team when you're going to move on to that next business, it's effectively startup mode. Even if it has some initial lead, it needs all that cultivating, strategy setting. How do we want to do it? It can only really be possible if you've got a good enough team to carry on day-to-day operations. Obviously, you're still overlooking of the foundational business. Would you agree with that?
No, absolutely. Like, you're going in there saying, look, we're going to start this new venture or new arm to the business, and you need a team to buy into that. But then everyone needs to know their roles and responsibilities within the business so they can execute the objectives, right? And I think you need to be very clear on what the organisation structure is with the new arm and who's going to do what, and then make it clear to the team why we're doing that, and even to the customers why you're doing that and how it will serve them and us as a business. Sorry. No,
it's fine. I was going to say there's so many good points and golden nuggets you're dropping here. But one of the key things you mentioned, which I want to come back to before we go too far on, is removing greed and jealousy from the business. Like initiatives like that come from the top down. They do in organizations because it's the leader's job to find who's the kind of rotten apple, i.e. not abiding by the key values and to cultivate that straight away. It's one of the leader's fundamental jobs, because keeping them in is a disservice to everybody, and you only want A players around. But how did you know that type of thing? Like, is it just a natural thing for you that you're not a greedy or jealous person, or how did you? Most businesses wouldn't have thought to instill that.
I think again, like a lot of people want to start a business early on, but experience can save you a lot of money, and it's going and getting that experience. And from my experiences, I've witnessed a lot of JVs happening around me, and I put the funding in place for certain people, and it's that blind optimism. They're sitting in a pub and they're saying, "This person's done a deal. I think we can do a deal," and they go, "I want to do that. I want a bit of that," and their optimism takes them to that starting point of let's do this together, and they do it together. But then what happens is they need to take the action to make that thing they're doing a success. If they don't take the right action or have the right knowledge to take the right action, then that opportunity can quickly become not a win and could cause financial distress, right? So you've got action over here, but also you've then got the partners within it. One person's doing more than the other, one's doing less, one's putting more capital in, whatever that may look. Suddenly they're speaking to other people about their opportunity and they're giving their 2 pence into it. That's when jealousy and greed can kick in my experience, which I've seen.
So you're getting 50% for that, yet you're doing all the work as well.
Exactly.
That's not fair. But by the time you said that, all contracts are signed and they're knee deep in the development or project or JV.
And the business ultimately fails, right? Because there's been a misalignment. And what they're better off doing is going in that pub or wherever. There's an opportunity here, and I think we can make it work. My skill set is this, and your skill set is that. This is the downside of doing it: financial, time, commitment, competition. But I reckon we can offset this by this, and this. Would you be interested? Yes. This is what happens if we win. This is what happens if we fail. Are we in agreement? And it still might not work, but at least there's been a conversation around that. So for us, for seeing that over and over again, like JVs fail with different business owners and entrepreneurs and property people. Me and Paul, so Paul's business partner, he's come into the business 3 months in, we used to work together, and he's now one of the partners in pretty much every business we're involved in. We just said, look, it's going to get tough, but there'll be some wins along the way. If we can just take our egos out of the situation and remove the greed and the jealousy, you know your role, you know mine, let's lean into each other. Even if we get it wrong sometimes, let's try and find our way back to moving the goal, the objectives, or the business to where we want to go, which are our objectives, then we should be okay. And that's what we do. And we just, so the rest of the team, we've kind of just got to live and breathe that.
Yeah, that's excellent. I've always personally found that very difficult, and the managing director of this and all the other business I've been involved with previously, I've never really managed to get that click working from a business partner point of view. So it's always been to do with some form of misalignment and
well, there's another thing there as well, because it's like ambition as well. And so you're greed and jealousy, which you can put to one side, but then ambition, like you're an ambitious person. Obviously, Fastco 50 got a great team here doing fantastic things within the sector. So you're driving the ship, right? But then when you bring on partners, do they want to go on that journey with you? Now, everyone kind of wants to go on the journey because it sounds fun. But then when you're, the
sacrifices that go with it then.
The sacrifices, someone wanted to be a partner once in our business, and I said, but he didn't want his life to change. And I said, I can't guarantee your life won't change. Now, it could change for the better, but also there'll be times when it feels like for the worse, because late nights, commitment, weekends, you can't just be a partner and not step up to the plate. You can't have both. You get the reward for putting in the effort and work.
I agree.
And that didn't work, that partnership, because I didn't allow it, because he wouldn't put himself in a position where you had to operate as a partner.
Now, so Ramsay White, so you've got mortgage advisory, financial advisory and wealth management. You've got an estate agency.
Estate and
lettings. You've got accountancy practice.
Have
I missed one for now? Or there's some that you can't say yet.
No, that is the Ramsay White group. We have other interests outside of that. But,
where are you trying to take it to? Like, what is the, you're clearly a very strategic, thoughtful person. You've got your own plan. As much as you can say that isn't confidential, where's the group going?
right now we're trying to make the group, the people within the group, the best they can possibly be, because we always say that a business effectively is a group of people working together. So as well as the people do, we believe our business will thrive. Yeah, so it's only as good as kind of the team you've got. So right now our objective is to develop our team and make them A players, like you said.
Yeah.
And we're very proud of the team we've got. 70% of the people that work at Ramsay White never had industry experience.
No.
So we didn't go out to market and try and find people that had 5-10 years experience. We're open to conversations, but old dogs, you know, bad habits and all this stuff.
I agree with that. Yeah, some of the younger and less experienced individuals we have in this company are by far much better than the ones that have a lot of experience.
I think two things we look for is attitude and aptitude. Attitude, do they want to do it? And aptitude, can they do it, right? So, like, I'll give you an example. Lewis, 17 years old, joined us as an apprentice 2 years ago. He's 19 now. He's worked on hundreds of applications. He's just got in, learned. So straight from school, could have gone to college, uni, whatever, but he chose to work with us on the apprenticeship scheme. Worked on hundreds of applications, working with some of the most talented entrepreneurs and business owners in this space. And he's now doing his CMAP, so qualified mortgage advisor, in the next couple of months. In 2 or 3 years, he'll go on to do his DIP-FA, so qualified diploma in financial advisory. Off what he's learned, he's set up a limited company with his father and has started buying property, investment property, like buying it, refurbing it, and renting out. He's got 2, he's got his 3rd one. So it's amazing to see. So he's got his stocks and shares ISA set up. He's got his portfolio on the go. He's becoming an advisor. He's learning. You know, by the time he's 27, he could be a branch partner within the organisation.
Yeah.
You know, for me, that's success. We want to see people come from grassroots, become partners, and grow and develop the business.
Definitely.
So we want to keep developing the people within the team and giving them that opportunity as a platform. I don't want people at Ramsay White just to come to work with us and pay their council tax bill. You know, I want them to actually develop individually, which will allow the business to grow. Our core values are growth, excellence, and communication. You know, growth is personal for me as well, and we really talk about that and believe in the team to operate in that way. You know, like you said, like A players. But as a business, we want to move the business into the market in a sustainable way, but which will keep allowing growth, you know. So there's another arm of the business which is corporate finance. So a lot of our clients are business owners, property people, but they have businesses in the background. So they're looking for growth through the right type of structure and funding. So we're looking at doing that and operating in that space. So for us, it
makes sense.
This is just holistic advice again.
You've got a skill set for it.
Yeah. So I think, you know, we've had people approach us and saying, you know, this is what we'd buy your business for, but what would we do if we did sell? You know, right now it's about growth, but in a sustainable manner, where our systems and processes are robust, and you know, we're leaders in our space. One thing we say to people, or some of our clients, is about capital adequacy. You know, you can take all the risk you want, but if the market changes, where does that leave your business? If you look at like 2007 and 8, a lot of the lenders lent so much money, but they didn't have anything in the background. And off the back of that, there's
Like runs on the bank.
You need capital adequacy. So every pound you lend out, you effectively need a pound in the bank.
So they were lending out like 50 to 1, I think.
Well, 120. Northern Rock, 120. 120,000 on a £100,000 house or whatever. They'll give you a car on a holiday. But
they're also lending like their available resources, because it's like digits and the way they do it, instruction and selling. The run on a bank was not possible. They didn't have the liquidity to pay back the people. And that's and those is obviously much more stringent nowadays for, as I say, capital adequacy, liquidity tests for banks.
And I think you need that in your own business, you know, as a portfolio landlord or a business operator.
That's what I say to anyone in development. Going through the development finance process is not actually, it's very frustrating, but it's not necessarily a bad thing, because you're having eyes over from underwriters you may not necessarily agree with, but if several lenders all don't want to do the deal for similar reasons, you know, it's probably your own entrepreneurial brain, or you're kidding yourself that it will actually work, when others that see so much data saying this isn't right, you know.
I think there's normally pushback. Some developers valuation. Well, I had a independent valuation. Okay, well, you paid them and you told them what you want. But the lenders then had a third party valuer go out to the property or land or whatever it may be, and they're saying that it's worth this because of their report, right? Which the project's not viable at the price you're paying. They're not saying they won't lend, they're just saying it's not viable at that for their metrics. Now, there's another lender that might do it at that level or slightly less, but it does give you an opportunity to go back and negotiate. So I think you've got to take it as an opportunity to improve the deal itself.
Yeah, I agree. But you mentioned something there which is really important, because it's not just about being an entrepreneur and an employee. There's also this, which what you was referring to as well, cultivating that brand of, which are also extremely successful group in their own right, entrepreneurs. And if you structure your business so it's open and you're open to feedback, and that can only really happen when, from a top-down approach, ego is pushed away and openness is allowed in. I don't mind being wrong at all. I ask my team for opinions and advice, and it's one of the key things about launching a social house building and construction business and not having a background in that industry. It's that I have to ask questions and drill down into it. I can't have an ego, because I need to know the answer. And that you end up cultivating with A players. As long we've mimicked our values off Patrick Lencioni, a business author, which I resonate with so much. And humble, smart, and driven. But those are the key three. Be driven, but remain humble. And smart is not necessarily IQ; it's all about EQ. And it's all about, again, the best out of people. And you can cultivate a group of entrepreneurs that are working not just in the business, but they're generating ideas. They're thinking, how can we take this to the next? How can we be better? How can my team be better? And you can only do that if you allow openness in your organisation. Yeah,
you don't want to shut people down when they come to you with ideas or feedback on projects or processes you're putting in place. I think if you've got that mindset, which obviously you do, like that kind of abundance mindset, that you're not going to be threatened if someone says, I think things should be done like this, and actually take it on board, and that could actually save you money and make you money, make the client's experience better. Why wouldn't you welcome that kind of feedback? And also they then get the autonomy to grow and develop individually,
and they provide more ideas because they're being listened to. Everyone wants to be listened to, and if it's human nature, if you feel listened to and people take your ideas and you actually implement them, you just automatically get a sense of pride. And this is if you have a team of 50, 60, 70 people. What's your team size now?
29, and we just recruited 4 people, so that's 33.
And if all of the business experience along your 5 different businesses and growing, and 34 team members, so to speak. I've got a couple of key questions from that. How do you keep on top of all that growth and where you want to get to in terms of self-development? What else are you doing on a structured learning basis, or do you have like a mentor? How do you keep in front of that? That's the first question.
I read a lot. I had an unofficial non-exec for a while, so I used to bounce ideas off them. They have 270 odd team members, 20 odd £1 million turnover. So I learned a lot from them in terms of leadership and management. And so that was good. And I'd done, like yourself, Cranfield Business Growth Program, which allowed me to take time outside of the business and focus on the business rather than in it. And I think on a day-to-day, I'm constantly just lensing out. Everyone on the floor is doing what they need to do. We've got 2 offices, and I got like another office which I kind of sit in. And before I do anything within the business, I'm kind of like looking like holistically on top of it, so like helicoptering out basically. And I think I'm kind of I go through stages of what do I need as a leader and what does the business need. So it could be marketing or sales or leadership or systems and processes. So whatever I feel the business needs or I need, I'll kind of focus my personal development towards that.
And off that then, well, what does a typical day look like for you then? Where do you spend, as the group MD and the leader, where do you spend your time?
So we've got, within the group, we've got Jay Herbert, who's the managing director of the estate agency, Paul Davis, who's the managing director of the mortgage business, Dean Cripp's obviously a partner within the mortgage business and the wealth management, and I'm overseeing the MDs and the strategic growth of the wealth management business. So underneath them you've got management, head of sales, etc. So we have our structure. So I check in with these guys to make sure we're all aligned and moving the business forward initially, but that's not every day I'll do that. So that's like strategically where we're taking the business, what's our objectives, when do we want to be there, what's our KPIs, what's their feedback, what do they need as a leadership team. Outside of that, I'm working with entrepreneurs and business operators who are looking to progress their companies. So they may need funding for acquisitions, they need structure around that, or they might want to look at wealth management strategies. So I'll work with them on that side of things. This is like high performing kind of entrepreneurs. So I'll give you an example. A client at the moment is buying a group of companies that's in South Wales, and its purchase price is 1.5 million, and they wanted to structure funding around it. So I've shown them a way how they can effectively put next to nothing down in the deal and use lender finance and government funding and the business funding to do it, where it's still a profitable business, and set them up in a way where they can take money out of the business invested in a tax-free manner. So it's more about structure on a day-to-day. So I've got a group of clients that I work with in that space.
The funding and the because I did CMAP as well, and CIRA, and I did commercial finance.
I was going to say this. You're like got more qualifications than me. Accountancy,
QS. But it's because I'm exactly the same as you. From my letting agency through a state agency, I've done all of them. I've qualified in them all. All about getting that holistic understanding. Because I wanted to be so knowledgeable in what I was doing, and starting this business and negotiating multi-million-pound deals at the age of 23, you can't do that unless you've got a very broad and deep knowledge set in the sector. And that's how I did it. Basically, going through school, I was a C student, and then after school I became a massive nerd. So
that's it. Like because your interests are aligned with the learning, right? So definitely. You're doing when you're in school and you're learning. Men. Mice and men, right. So you're learning that, and you're like, oh, this doesn't make any. It's not relevant to what I want to achieve, which I don't really know yet, but no one's giving me that guidance. I agree. So I think once you know what you want, and then you're willing to learn everything around it to make that successful.
100%. But you mentioned something there. What I've realised is my finance knowledge was so pivotal to this business success, any business success. You've just talked about the structuring a £1.5 million deal with relatively small amount of actual capital from the buyer. And you can do very similar deals in property, business, as you just talked about, business. When people realise that is possible, as long as the deal aligns it, everything unlocks in terms of capability and opportunity in the world. But time and time again, you hear business owners or people getting into business saying, I'm not very good with numbers, so I won't look at anything finance. Basically, someone else will deal with that. What's your opinion on that statement?
For them, I would say it's worth spending some time learning, even the fundamentals, because for me, reading a P&L daily, weekly, monthly is how I run the business. I make informed decisions on hiring, growth based on what we're doing, right? Not just like, oh, we've got money in the bank, that means we're doing well. No, it's actually, what are we spending money on? What's our return on our expenses, etc. So if you don't have a basic understanding of that, you're putting yourself at risk, because ultimately you're putting that piece of your business in someone else's hands. So you either have to trust them, or they need an extensive kind of background in that space and demonstrate credibility where they can add value. And we do work with some people who understand it, but they don't have the time. So for us, even though we've got a group of companies, I see Ramsay and White as an extension of someone's business, because we're adding value into their business, and hopefully their business will grow off the back of it, and all the action they're taking, and then our business grows. It's a symbiotic relationship. But I think it's really important as an entrepreneur, business owner, to understand the fundamentals of the numbers. You always sit on the Dragon's Den, right? You don't know your numbers.
I know,
it's the basics of being in business.
Business 101, isn't it?
And also, if you speak to business managers or lenders, they'll always ask, what's your revenue, what's the expensive, what's the profit margins, where does that come from? So this is where you have to take time out of the business to look in and go, right, what's going on?
Yeah.
And what's my strengths and weaknesses, and how do I bridge that gap?
Yeah, definitely.
What's your views on it? I mean, you're quite meticulous with the numbers.
Yeah, I mean, so similar to you, I'm effectively Group MD as well, and leader, and I spend my time on 4 key pillars really, which is easy to reference, because I highly recommend the book Scaling Up by Vern Harnish. I do other things, but they ultimately is what that book says as well. 4 key pillars: strategy, people, cash, execution. And those are the 4 pillars, and then under each of those pillars there's very specific things that I look at, but on a daily basis I'm considering all 4 of those pillars. Is our strategy still aligned from where we are now versus where we want to be, and are we doing the right things to get there, which is another business framework, which is actually modeled from Cranfield, Growing Your Business. It's that start with those 3 questions and everything builds from there. Then people, as you've said, is I have my heads of divisions, and each division has a set of KPIs, a reporting structure, a meeting structure. It has very predictable outcomes as to what's expected, so I know if that kind of division is green, amber or red, so to speak. So as like an aeroplane pilot, I know on my dashboard across my divisions what's green, what's amber, what's red, and therefore what do I need to spend my time on. Cash is fundamental in this business. Most businesses don't fail because they run out of business. They fail because of number-related issues, financial-related issues. They run out of cash mainly. They've not, they've that financial stability just isn't there, and it's not been structured in properly, or they've not seen 9 months in the future that I'm going to need X amount of money because my working capital cycle is negative. And then execution, which is all about systems, processes, and cutting waste from the business and making it as lean as possible. Getting from A to Z with as few steps, but still reporting the right information. So making sure, basically being able to increase that revenue per employee and that overhead to revenue ratio down, because staff is such a huge expense to the business, any business, especially service related businesses, probably your biggest cost. So the more they can do without being overworked and overstretched, and a big part, the more profitable, but the big part of that is systems related, processes related. Are they doing things for the sake of doing things? Old dogs or old tricks? Are they bringing stuff in that worked in the 80s? Don't need that anymore. Are
you naturally good at that, or have you trained yourself? I know I need to get this done, because some people love selling, right, and they're really good at it. But then processes is like, goes out the window. So you had to train yourself to kind of.
Oh yeah, definitely, 100%. All of this, I believe, everything I've just talked about there is all learned. I've not been personally. I don't think I've been born with anything other than. Similar with you, really. There was a spark. I kind of knew what I wanted to do, and everything else has been learnt along the way from my team members I brought in, and also continual professional development. Books, massive. Audibles. I've listened to over 300 different Audible books. I've read tons of books. I've done so many different courses, and also I'm surrounding myself with A players, and I'm openly asking them to tell me their opinion, their ideas. If you do all of that, you shouldn't. You should go far. It could still go wrong because of macroeconomics you can't control. But anyway, I'm rambling now.
It's good. It's good. I'm learning something. So I
get quite passionate about these things, and so I want to go and read a book now.
Got that one
there. No, but excellent. So, and then turn this on to somebody listening. They're employed. They want to get into a business. Call it a property related business, because I know there's tons of others out there, but it's a common occurrence for both of us. what would be, if you had your time again and you was back in that position now, what would you have done differently, and what would be your first moves? Employed, about to launch business, what was the first moves?
I mean, knowing what I know now, I just straight into business, but
you wouldn't do that. You wouldn't do that 20 years stint.
I think, I said about experience. I think you can't beat that. And if you're, it depends on your risk profile and how much capital you've got, and knowledge you've got in the sector you want to go into. And if all of them are limited, I would really say go and get around. You mentioned about being around A players. I'd go and find A players to hang around with in that space and learn from them, add value within that business, and learn as much as possible. And then when the time's right, then set up on your own. Like, look at Lewis, I spoke about, 17 years old, joined us, now doing CMAP, bought 2 houses, has his 3rd one, learned about JVs, limit company setup, stocks and shares ISAs, working with entrepreneurs, investors 2-3 times his age. That knowledge is invaluable.
Fully agree.
So for us, we've got to think, well, how do we retain someone like Lewis in 7 years? Because when he's 25, he'd been in the business 8 years, 7-8 years. So
it's phenomenal.
That's quite a long time, isn't it?
Yeah.
So what we need to do is build something that's make sure he'll want to stay, and others like him within the business. But he'll have all the tools to go and set up on his own if he wants to. So, and that will give him an advantage against another 25-year-old who's just starting out. They are in business alongside each other, but the difference is Lewis has 7 years experience of working with A players, so just cut through
98% of the problems.
And I think as you develop and get more responsibility, you understand them problems a lot more. Obviously, you'll never truly understand until it's your own money or your name above the door. That's a whole different thing. So, but if you're starting out, I would say to entrepreneurs, start learning, wanting to learn. There's books like Think and Grow Rich for mindset, or if you don't know about sales, you got what did I read when I was younger? Zero Resistance Selling was one of them.
Right,
Sell or Be Sold by Grant Cardone. These are books that really help develop my mindset and skill set to be able to communicate with potential clients. And then it was more like strategy books and not just so much on the mindset, and then actually going around to different companies who were operating in that space. Because for me, I was going to start up a estate agency originally, but the costs were very high. Rightmove, Zoopla, it cost thousands of pounds.
You had to commit for
12 months.
12 months, and you had no sales.
And then it goes up exactly. So it was at that time in my life, it was too expensive. So then I found another route, but then I looped back round. So my thing was reading, get experience, and get around some A players.
Do you know what? I did a video recently, and my advice to people getting started off exactly the same as that, which was build knowledge first with as many free resources as possible, then books, and then some special. I've got nothing against courses as long as you're actually going to take action from them. But you should still also get some base knowledge before going on to one, in my opinion, because you get much more out of it. And then number 2 was building that network. Because only until you've done those 2 things would you have tested things mentally, and you're ready to make a step. And then when you do make a step, follow other principles, as you've already mentioned, some books like The Lean Startup. Do it as lean as possible. Don't put all your eggs straight in. Test and test and test until you find what works, what people want, what's that gap in the market, what's your advantage, and then once it starts working, straight in.
Exactly. So, and it's also understanding the market you're going into. We talk about the property market in Wales right now, as we're based in Wales, right? So what's going on in the market? So the average house price in Wales at the moment is 230,000. In 2022 it was 250. So it's dropped by 20,000, but we've seen this year property prices move to about 1.6% nationwide, I think, come out of that. But Savills have said over the next 5 years they believe that Wales will see the most growth across against the rest of the UK for average house prices of around 24%. Okay, well, what does that mean to you if you're going into that sector? Okay, if you look at the Labour's manifesto, they said that they want to build 1.5 million houses in the next 5 years. Okay, so that's double what's being built now. Okay, so there's a massive shortfall. What does that mean to you that knowledge? Can you do anything with that? Really understand. You can only control what you're in control of, but that kind of external information that's going on in your sector, what does that mean to you? And how do you kind of take that and run with it? So important to stay in tune.
I fully agree. And it does lead me on to a question just before we close up, which is emerging technology in the space and how it's potentially impacting your business. So AI.
Yeah. Amazing.
What how do you see that as a threat, an opportunity in your sector? How do you think that's going to, hit the mortgages and financial advice sector, the agency sector, the accountancy sector?
Yeah, I mean, it's like, if we look at history, the internet, it's just a faff, not happening, and technology just comes in rapidly and bulldozers. So I think we need to embrace it, learn about it, and see how we can make our business better off the back of it. In this day and age, there's so much more information available. So we're seeing younger investors come to the market now because they're on YouTube or they're going to networking events, so they've got access to that data. The difference between maybe AI looking online to working with an advisor, it's just distilling that information, because they can have so much information, what is actually right for them. And sometimes that does need a human approach. So where are they now and where do they want to be, and what vehicles are there that will allow them to get there. And AI can help speed up the processes within there, but they may just need that human touch. So I think we should be leaning into the technology, like open banking is one. There is stuff they're developing with fraud prevention, which is you're seeing a lot of fraud, especially in London now, on phones being stolen. So how do we prevent that using the right technology? But I think people are threatened, but it's only because they don't know what they don't know. And but you've got to lean into it, spend some time learning about it, and see how we can implement it or make it work alongside our business to ultimately make us more efficient. Yeah,
amazing. Joe, we could talk for hours and hours and hours and all day, but thank you for coming down. I got so much value out of that, and I look forward to the viewers listening to this. So thanks, Joe.